The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen, and thank you for being with me this evening. My name is John Needham, and I'll be your host for today. And we've got an amazing show for today. So glad to see all our regulars here with us. Well done. Oh, Mickey, thank you. You beat me to it. Yes, Mick, you can hear me well. That's great. So we know the audio's working. Florian's with us. That's grand. Oh, Frank, haven't seen you for a while. Oh, they've got the new Frank who's doing a TTT, Teach Yourself Trading tutorial video session. Wonderful to have you. Gabe over there in California. George is with us. Greg is with us. The other Greg is with us. Both of them are with us. It's wonderful. Jen's with us. Nice to see you here, Jen. Mark L, of course. No party without him. Mickey D, we missed our full moon lunch, Mick, and we need to get back on that schedule. Pieter's with us. Wonderful to have you. Robert, welcome. Toddy in Southern California, welcome. Many Peters, many Gregs. And Pieter is in Auckland, of course, a land of the long white cloud. So, yes, I said good evening to our friends in the States and Canada. It's good morning if you're on the east coast of Australia. Good afternoon elsewhere, and also good afternoon to our friends across the Tasman in the beautiful land of New Zealand, which I hope is getting better. I hear murmurings that things are improving after the disaster of the last administration. Anyway, there we are. So much to talk about, and I hope you're feeling attentive today. Some of this stuff is quite detailed, and it'll tire you out in the process. So do go and get yourself a cup of coffee or a scotch or whatever your normal tipple is for this time of the day, and I'll try and make it as straightforward as I can. So, folks, you know markets are rational, orderly, and sometimes predictable. And you know that creating and trading Danielcode time signals is the best trading system I've ever seen or heard of. And we have a number of our wonderful people here who share their experiences of doing their Danielcode tutorial with us. Mark L, Greg Palladini, of course, he's a wealth manager in California. The other Greg, who's also a wealth manager, now retiring, I think, we can say, from Colorado Springs and Texas. All those wonderful people with us. I don't know if Justin's with us yet. He usually comes along somewhere or other. Rolf just joined us from Melbourne. Welcome, Rolf. Good to have you with us. Okay. So, day trading. I used to be a fierce day trader. I've traded everything down to 3 tick bars. Whatever you can think of, I assure you I've done it. But it's been some time, and because I wanted to talk to you today, because so many of you have asked me to talk about it, and it's been a while since I did the day trading, I actually put on a couple of trades and had a very, very nice day. In fact, I've had a super day. It's also wonderful. But this stuff just works perfectly if you have the tools and you understand how markets work from Danielcode. You'll see what I'm talking about. So this is the S&P, and you can see the various price levels on it. The red and black ones are retracements of the range. The blue ones are extensions of the range, and you can see how incredibly dominant they are. We had a very interesting run across the top here where the market was trying to break through the 57.17 number, which it did eventually. And that close above that black line was the signal that this market could go higher, but it needed a retracement first. And you see that retracement, it stopped right on the red line down at 54.49. Back up, tracking the blue lines up. You can see how you're getting this target recognition. On this first blue line, the market closes right on that blue line. On the next one, the market slips through. Look what happens on the next line. the high is almost exactly at the blue line. Here's the very next day. Now the close is exactly on the blue line and the next day. So this market is searching for these blue lines. Then it has a little rally, hits the next blue line up, reverses, gives you a nasty little key reversal bar. Back on the track today, back on its buy side from its flip me signal, and it's tracking the numbers again. I'm going to show you more of that because all you looked at there is a daily chart. Now, one of the most basic and simple ways of trading, day trading, short-term bars. This is a 59-minute bar chart. Each bar is 59 minutes. It's the second of the major Danielcode numbers, 29, 44, 59. And you can use any of the Danielcode numbers. Later on I'll show you a 29-minute chart. And what we've done here is we've just added a moving average at the high and a moving average of the low. And markets run, most markets, electronic markets run for 12 hours a day. Others run for less. But the simplest way to do it is to use a 12-period moving average, what you've got on here, or you can use a 6-period moving average. Remembering, those of you who've done the tutorial will understand that 6 is the measure of minor time. So all we're doing is we're taking Danielcode stuff here and superimposing it on shorter term charts. And basically the rule is that if the market is above if the close of the market is above the red line, you want to be long or looking for the next buy signal. If the close of the market is below the blue line, you want to be short or taking the next short signal. And you can see this was pretty straightforward. You had just a minor counter trend in there, and then off it went. It never threatened the red line at all, and there was an easy 3,500 in this market for today's day trading. Let's look at it a bit further. We can tell with our blue and red lines. Incidentally, I don't know if Jonathan's with us, but he wrote to tell me he's colorblind. He's actually not colorblind. He's what we call a dichromat, a person who has trouble telling the difference between red and green, and I'm a dichromat, so I know what he was talking about. And those of you who've done tutorials occasionally will hear me say all of these indicators have to be in red and blue and black, nothing else, or they won't work. And when the poor student says, why won't they work? I can't understand that. I've never heard that before. Then I tell them, well, I'm a dichromat. I can't see all those other fancy colors that go on charts. And if I can't see them, they don't work, do they? Okay, here we are. Let's keep moving. So what we've done now, once you get below daily bars, you've still got the blue lines on there. They're straight off the charts, daily charts. They're extensions of the range. But the blue and the black line, sorry, I should say the red and the black lines, they're retracements of the range. And once you get down below a daily bar, the Danielcode retracement tool becomes absolutely supreme. You can see this low here. This was the high up here. This was a pullback of the previous range from this high to a previous important swing low, which is not on this chart. It's a bit further back. But you can see how exactly this market bottomed exactly at the Danielcode black line at 56.75 a half. From there, it turned. It was sitting right there on a time buy signal. Those of you who've done a Danielcode tutorial, your time signals work exactly the same on short-term charts as they do on the daily charts. So off it went, and we've got our close the very next day above the red line. So we take the buy signal and off we go. And look what happens as we go up here. First of all, just watch. I'm going to get the other tool so I can show you this, because this is what markets do all the time, and it's terribly important that you understand it. So have a look at this market. This bar here, we've taken the buy signal. There was a glow down there with a buy signal on it. We've taken the close there was still above the red line, and we took the next buy signal there, and we're long. Look what happens. This bar here closes almost exactly on that red line at 57.35. So does the next bar. So does the next bar. It's looking for support. That's what it's doing. 2 bars later, the high is almost exactly at the next red line, which is 57.47. What happens with the bar after that? It closes exactly on the next level. Now, all these levels are created by the same tool, and it's called, do excuse me folks, a little bit of morning hay fever is kicking in here. It's called the Danielcode retracement tool, and you've seen it work from the low to the high and the high to the low. But as well as that, if you just go on adding the extra ratios, in other words, once it's got to 0, that's 100, the tool won't take 100, so put in 100.01. And then the next number up, of course, is the same set of numbers. It's 1.24, 1.37, 1.44, all the Danielcode ratios. Once you get past that, then you start on the 2s. 2 this, 2.29, 2.37, 2.44. And as you can see, look at these bars there, absolutely tracking every one of these price levels. In other words, the market is talking to you. Now, I know that sounds absurd, but I've been saying it for 20 years. And I must say, until we had the Danielcode, we couldn't actually prove it, but because we didn't have the language of markets. But with Danielcode, it's the DNA of markets, and we can now look at these bars and see what they're doing. And these 3 closes through here, this market is saying to you, I know these numbers and I'm tracking them. 2 bars later, it stops right at that high, 57.47. It's saying to you, I know these numbers and I'm tracking them. Here's the next bar up. Same thing, closes exactly at the next Danielcode retracement. It is speaking to you. It is saying, I know these numbers and I'm tracking them. Here's the next bar. It goes to exactly the next level. You'll think I'm making this up. It's so obvious. It closes exactly on that number at 57.67. Then it goes to the next bar. It slips through the blue line and it pulls back from the high to try and close on the blue line. It doesn't quite make it. The very next bar runs up. It goes right to the 57.79 black line, a red line I should say. That's it. It stops there. It does a little retracement. The retracement itself is incredibly accurate. Look what it does. It puts in a key reversal bar, the high of which is right at that 57.79 level. Then it runs down until it finds the next number, 57.47. It doesn't quite go far enough for that, but look what it does. Look how clever it is. It pulls back and it does a reversal, and off it goes. And the high, it runs through the old high and it breaks through the next number up there, 57.86. It's telling you it's going to go to the next number. And it does. The very next bar closes exactly on the 57.86 line. The very next bar after that closes almost exactly on the 57.91 line. Then it does a key reversal bar into a Danielcode time sell signal. So can you see how incredibly orderly and rational this is? For most people, if you're looking at short-term charts, it looks terribly disorganized, and it is. But once you put the Danielcode ratios on it, everything becomes clear and simple. The markets will run up to the Danielcode numbers. If they go past it, they'll go to one of the next Danielcode numbers. If they do a reversal and do a pullback, they'll be supported by one of the same Danielcode numbers. It's an endlessly repeating loop. This is the S&P from today, incidentally, folks. Let's see if I can get on to the next contract, which I want for you. Here it is. I think this is changed. I'm not sure what this has changed to. This is much the same. What this is, it's finding the low here, which I hadn't done for you before. It's just showing you with that light pink shaded light triangle there. That's showing you the last range, which to find the low, you found that from a previous range that's not on the page, but that gave you the low which started the rally up. Okay, just straightforward Danielcode trading stuff. Now, that's the S&P. This is crypto. I know most of you are not interested in crypto, but I do get a lot of inquiries saying, does Daniel Code work on crypto? And I guess with the new younger members coming in now, it's going to be a matter of interest to them. And if you're interested in volatility, which is what makes the money, crypto will give you volatility in spades. Have a look at this. We're just talking about the last 3 days trading, September 15, 16, and 19, that I've highlighted there. They look like totally inconsequential bars. They're just a little 1-bar counter trend correction and then back up with the trend. Have a look what happens to it when we start to put some numbers on it. Let's have a look at this now on a 59-minute bar. This particular chart is a coin called Binance. It's a very, very big deal in the crypto world, and it's just been approved by the US regulators to trade in America. They gave the boss of it, who's a very, very clever young Asian gentleman, I think they gave him 3 months in jail for pleading guilty to all sorts of not very important transgressions, but they were breaches of law, so the penalty has to be paid. But it's not a very long penalty, and Binance is his coin, now one of the most reputable crypto platforms out there. So all we've done here is we've taken the Trade Navigator chart of Binance, and we've turned it into a 59-minute bar, which runs from September 15th down to the 16th and rallies up all the way into today. Looks what happens when we put our red and blue lines on. I keep repeat, these are a moving average of the high and a average of the low, shifted 1 period forward. And they are working on a 12-day cycle. The period of each of these is 12. You can use any period you like, as long as it's one of the Daniel Code ratios. You could use 6 or 3 if you really wanted to, but they do get very, very narrow. This is pretty straightforward. If you look at it, you can say if the close is below the blue line, we either want to be short or take the next sell signal. And if the close is above the blue line, we either want to be long or take the next buy signal. So we were short all the way down here. This is a nice little rundown, very nice stuff. And up here you get into the rally. There's the change of trend on that bar, and it rallies up and up and up, and then it comes down. Look how accurate this thing is. From this low bar here, it does a rally, and it's stopped by the blue line. 8 or 10 bars later, it does that same rally again. It stopped at exactly the blue line. It is saying to you, I know these numbers and I'm tracking them, even though this is a long-term moving average. And you could use a weighted moving average if you wanted, or even an exponential moving average. But the very basic moving average that I'm using here, it does the job. And you see this all the time. Look at this. It's running down, closes below the blue line, so we're short. Look what happens here. See how this market rallies here and it tests the red line, and it goes down and it does it again, and it goes down further and it does it again. And from there, if you look really closely, you can see that close that I'm highlighting for you is just above the red line. That's the probable change of trend to up, and off it goes. You're either going to be long or you're going to take the next buy signal, doesn't matter which. And off it goes. And it's pretty impressive, isn't it? So this was the swing to correct. I said that this correction came from an earlier period, but you can see that the major swing wasn't on your charts before, but it's basically the complex high at September the 15th down to that important low on September the 11th. And if we just put on the standard Daniel Code retracement tool, if you're subscribed to the DC website Pro, you can get this tool. Terry will organize it for you, and the Danielcode Time Cycle tool as well. That's part of your subscription, folks. So look what happens. This market starts to run down from the September 15 high, and look where it stops. It stops right at the blue line, breaks through that, stops at the next blue line right at the close, little rally up to the blue line, then down, breaks through the next blue line. Look what it does here. Stops right at that bottom blue line at 528. That's an extension of the range. It stops exactly there, rallies back up, and then a couple of bars later it's ready to go long and take off. But the precision with which this market moves is so extraordinary. As you can see from the other side, look when this thing rallies up to the high. Where does it stop? Right at the blue line. Down it goes. 1 bar counter trend to where? The blue line. Down it goes. Multiple counter trends, slips through the blue line, goes back down again, finds support. Off it goes. All Danielcode numbers, all Danielcode numbers. Nothing very complex if you've got the right tool. So this is still on Binance, and what we've done, I've shown you that minor range there. This is later than the last chart. This is the next correction. We've taken that whole range and we've simply put on the Danielcode retracement tool with the range extended. In other words, the tool, when you get it, will go from 0 to 0, low to high. The biggest range inside it will be 0.89 or 89%. You can then start to add manually the additional ranges, which are the same ranges, but they'll have a 1 in front of them or a 2 in front of them. And you can see what happens. Look at this whole thing. I've shown you how we got this low. Look at this rally up here. Goes to the red line. Little 1.5 bar correction. Goes to the next red line. 1.5 bar correction. Goes to the next red line. That's the high for the moment. Down it goes. Now, we haven't put on the downward side support, but this market's just going to go ahead and it's going to use the lines that are there already. That's what it does. It goes down, pokes its nose through the bottom of this red line, rallies back up to where? The red line. Does it again more accurately. This is its way of saying, oops, sorry, I wasn't quite accurate enough. I'll do it again. Almost exactly hits the red line on the low and does hit the red line on the high exactly, and down it goes, down it goes, down it goes. Eventually you get this key reversal bar here. Look all the way this has been going on. The close is on that red line. This little rally runs back up to the second red line. From this one here, you can see this little rally back up here. And you're getting a close above the red line. That means you're either long or you're taking the next buy signal, and you're just going to run all the way up here. Okay, right here you've got a close below the blue line. You should be short or take the next sell signal. Look what happens. It runs along until it finds itself ready to move. It'll break straight through that red line, breaks through the next one, keeps going. There's some real momentum here because it's not recognizing the upside bars. But look what happens on the correction. The correction stops right at that red line. Then it runs back up again, goes to the ultimate high up here, and it stopped there for the day, pulls back. Where does it pull back to? Straight back to the next level of Danielcode. What was Danielcode resistance is now acting as Danielcode support. And that's the story a bit on Binance. So, still on Binance, these are the blue lines. These are the extensions of the range. Okay, now, if you're doing this on a daily chart, it's really very, very hard to do because we finish up with so many numbers that we then have to start running some statistical analysis, usually chi-squared, to see which of the lines are going to have the highest probability of being hit. Once you're doing it on a minute chart, this is a 59-minute chart, it's pretty simple and it's just quite mechanical. And look what happens here. Here's you get your high right here. Next one pokes through a little bit, starts to run back. Find support there. What was resistance is now support. Little rally, down again, find support again. Goes down, find support again. Not accurate enough, test the high, goes back, finds that support again. Now it's ready to run, off it goes. Ignores that blue line, goes straight through it. Ignores that blue line, goes straight through it. This is a really high momentum move. Sticks its head through that one, does a key reversal bar, back down 1 bar. Back up again, testing that high, comes back to find support, off it goes, up it goes. So the blue lines are not as important as the black and red retracement lines with the method of extending them that I've told you. But they're there for your information. So this is a change of chart. This is actually, excuse me, one of the Bitcoin charts. there are various versions of this. This one happens to be on GDAX. This is Bitcoin Cash versus the US dollar. Tether's the main platform producing these charts, but there are a number of them. They all have their own code. As you can see, Bitcoin's not trading anywhere near the numbers on this chart, but this is shows you exactly the same thing. Look what happens when this market breaks out, closes above the red line a couple of times, then has a final run through. Now you get a close outside the blue line. That's confirmation in a big way. This market's rallying. Off it goes straight up. Look at that. Whoosh, 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 whoosh. It doesn't stop, just ignores almost everything. But it doesn't ignore this number here. It stops here, right at this red line, which on this particular chart is at 341.19. As I say, this is a representation of this particular chart from GDAX. It's not actual Bitcoin. This works exactly the same way. Stops exactly there, finds that 341 is an important level, runs straight through it, eventually stops right up here and turns around and starts to come back. Look where it finds the support straight away. First support right at that 341 line, which it flagged on the run up. In other words, what was resistance has now become support. Little rally, it's testing the blue line, little break through it, still trying. Eventually it fails, down it goes. Where does it go? Straight down to the next blue line, which was an extension. It's now working as a retracement. From there, where does it go? Rally straight back up to the next blue line. So you can see that these markets are actually terribly, terribly orderly. This is the same chart. Which had a big fat buy signal sitting at that low, Danielcode Time buy signal. You can see that easily enough. And that is how that market worked all today. Okay, this was an easy one. I thought everyone's unduly focused on S&P for day trading, crypto guys on whatever particular coin they're interested in. But I thought I wanted to show you something as mundane as wheat, because this technique works in all markets. This is normal wheat, and this is running from September the 18th down to September the 19th. This is a daily chart. Actually, that was a 29-minute chart, I'm sorry. That's running on 29-minute bars. The next annual code level down from 59.3 is 29.6. You can forget about the decimal points, because as I've told you, there's almost 1/3 of the bars are not even on these charts. They're the bars representing weekends and federal market holidays, US federal holidays. But time doesn't stop because it's a weekend. Time doesn't stop because there's a federal holiday. And the amazing thing is, what we're actually doing with charts is we're taking 244 days or thereabouts number of trading days in a year, and we're trying to take 360 days of time and squash it into 244 days of available bars. And the great miracle is how it adapts, how the market adapts to this to make it absolutely seamless and almost perfect. So have a look at this. It's got a lovely big time signal, sell signal right up at the high on 918, another one 3 bars later. It's that little bar I put an arrow on after the high that tells you that this market is probably going to fail. That's the trend change bar. It's clearly got to close below the blue line. The previous bar's also got to close below the blue line, but it's ambiguous. It's very, very close to the blue line. This next little bar is the market's way of telling you we've now opted for the sell side. And the dark side, all this short-term trading stuff, really, I call it the dark side, because it's such fun, but it's a bit naughty because you're cheating a little bit and stealing from most other people. But that's fine. That's the game. That's the trading game, isn't it? But look at this. So simple. This is wheat, the most prosaic and conservative market you can think of. just runs down here like a lovely, absolute Trojan, isn't it? Closes below the blue line, closes below the blue line, closes below the blue line everywhere. You got to be short. You got to stay short. Easy enough with $530 odd per one contract, and you could have had 50 or 100 if you wanted to, as many as you like. But today was a really simple way of making money in wheat. It's a really simple trade on the 29-minute bar. So you can see that. You can see how organized this market actually is when you're using the right ratios. We're using the Danielcode minor time is 6. And if we're interested in 6, we must be interested in 3, which is a half, and we must be interested in 12, which is times. It shall be for time, times, and a half, Daniel was told. And that's what we're using. We're using a 12-period moving average off the high, 12-period moving average off the low, and the standard Danielcode retracement tools. So this is still wheat, and I want to show you how we get all these numbers right down to the bottom. That light pinky triangle there shows you the range it's correcting from that important low right up to the September 18th high. That's what we're correcting, and we've just put on all of the Danielcode retracement ratios. And look what happens. This thing is going to give you a close inside below the blue, which is telling you it's time to get short. And all the way down, as I said, you don't get a close above it. Down it goes, and look where it stops. There's that low, right on the red line. Market goes down 1, 2, 3, 4, 5 more bars, misses the red line, rallies back up, slips through the red line on top, and then puts in this bar, which is almost exactly on that red line at the high. That's the market's way of saying to you, oops, sorry, I know that I missed it, but I'll go back and get it, which it does. Look at this next bar, exactly sitting on the first of the black lines there. Now, these are not the typical Danielcode 89% black lines. These are just extensions of the range with that tool, which runs from high to low, and then we keep adding the next lot of numbers below it. Look what happens here as it goes down. Supported the line, breaks through, rallies back, goes to the next high, fails up there, down it comes again. What's it do? Look, it gets down to this line here. It closes on this line, it closes on this line twice. Then it plunges down. Remember target recognition. That's what these are. These are targets. These are actually time targets that we've converted into price. And how do we do that? Well, grab lesson 2 of the Teach Yourself Trading video series. Lesson 2 shows you and actually proves that time and price are the same thing on different axes. So these are actually time cycles, but they're perfect for price because they're the same thing to the market. Time and price are the same thing on different axes. And remember, this target recognition is valid at the bar, high, low, or the close. That close there tells you that's target recognition. You get the rally straight up. Look how careful this market is not to close above the blue line anywhere. It keeps running down, it keeps running down. So anywhere below the blue line tells you should be short. A close above the blue line tells you that downward move has failed. And it doesn't happen. It keeps going down, it keeps going down. Little rally back. Look at this last final couple of lows of today. 564.0, almost exactly 3 times. 1, 2, 3 bars. I know these numbers and I'm tracking them. The market is saying to you, I know these numbers and I'm tracking them. If you don't get one of these target recognitions within 3 bars, it's generally the market's way of saying to you, not these ratios, try a different ratio. And there are not a lot of ratios, so don't get panicked about that. There's only 1 or 2, usually 3. So there you are. Look how perfect that is. That's day trading made perfect for you guys. Let me move on. I've got an awful lot to talk to you about today. So this final chart, all I've done is I've taken over some of the line, taken out some of the lines that the market didn't respond to. And if you run your eye down that chart, looking how every blue line, every red line still on there, it's found support, it's found target recognition. The market has worked really, really hard to stop at those numbers or to close on those numbers.
excuse me. And the last 3 bars there, have a look. Really interesting, that 564 number. That was support for the last, this is a 30-minute chart, 29-minute chart. That was support for the last hour and a half of today's trading. Okay, so this is here, as I say, an easy $500 per one contract. Wasn't too hard, was it? Once you know, it's not hard. Okay, teach yourself to trade, folks. This is the video series which took so long for us to release, for which I do apologize. It's up and running now. Take a look at this, just right where I've got this little red pointer here. You'll see the words there, my videos, on the front page of the Danielcode website. Once you get your videos, simply write to me, tell me which ones you want. I'll invoice you, and then once you make your payment, these videos will appear inside your Danielcode membership page. And once you buy them, they're theirs, they're yours forever. And that new icon that says my videos will appear on the landing page. Click on that. Take you straight to your videos that you want. Now you've seen this, so I'm not going to waste a lot of time on it. There are 4 lessons in the Teach Yourself Trading videos. We can add additional videos if enough people are interested. If anyone was really interested in learning about trading, day trading on crypto or futures or even Forex, I'll be happy to do a video if there's a few of you that want it. Let me know. Lesson 1 is Daniel's code, finding Daniel's code and creating the time ratios that rule all markets. That's what you've been looking at. Lesson 2, creating and trading price signals, taking the Danielcode time signals and turning them into price targets. It's pretty clever. I'll show you how to do it. This is number 3. This is trends and trading tricks. We do need to be able to determine trend with a high degree of probability, and we need to be able to do that before the vast majority can. So a proper trend change generally takes 2, more usually it takes 3 bars. We don't have the luxury of that because we're futures traders, and the sword is very sharp and it cuts both ways. So we have to make an assumption about trend based on the last complete bar, and this lesson teaches you how to do that, as well as quite a lot of other things as well. This is lesson 4, learn to create and trade Danielcode time signals. And it's pretty interesting. This is, I think, gold, which is one of the more difficult markets to trade because there's so much cross current and so much commentary about it. This is lesson 4, part 2. Part 2 of lesson 4, they come together. There's no additional cost, and that shows you how to set up your charts, either on Trade Navigator if you have it, or on your other platform if you have it. So this is a slightly refined version of those same time signals you saw on gold. Have a look at them. This is 2 years and 7 months of the gold chart. Every important high and every important low comes at a Danielcode ratio. And this is a really slow time cycle running on this. I've got a 29-day time cycle on it. Every important high and every important low comes at the expiration of a Danielcode time cycle. And that's what trading time is all about. Pretty impressive, isn't it? Okay, so the things for you to think about, the Danielcode tutorial. I talk to you about this every time I do a webinar. I hope you will forgive me if you've heard it many times before, but that is the way to change your life. The Danielcode trading tutorial teaches you absolutely everything worth knowing about trading. And we've kindly had a couple of our very good clients who are with us today, Mark L. and Greg Palladini, who've given us comment in those links on the home page. Just go to the Danielcode website and you'll see there are 4 videos of interviews with clients telling us how they've progressed with their Danielcode tutorial. And to me, that's the most important thing about this business. It's not what my trading is. You may be interested in what my trading is, and a lot of people sort of run the thing, I've been a great trader and I can teach you. So I'll demonstrate my trading
and off you go. Well, it doesn't really work like that in real life. Bob Prechter, who's a excuse me, delightful chap, was an absolute gun trader in his younger days with his interpretation of Elliott Wave. The whole world didn't know about it then, but for the last 44 years or so, if you wanted a Section 7 license, work in a brokerage shop in the States, you had to study Elliott Wave. And it's a shame because more people come to me saying, I've lost a lot of money trading Elliott Wave than anything else. So it's not how good the trader is that's teaching you, it's how good he can teach you, how well can he get this across to you, which is why I use a different approach and say, I'm not going to tell you how good my trading is, I'm going to tell you that I can ask some of our clients to tell you how they have found it, what's their experience been. And we've got Mark L., Amy, and Justin from the Hunter Valley in Australia, New South Wales, talking to you about how they found their trading. So each of those little videos is about 20 minutes long. I do urge you to make time to go and watch a couple of them, and you will see the benefit of doing a Danielcode tutorial. That's where I teach it one-on-one. And we now have something called, we call that tutorial, the main tutorial many of you have done, we call that masterclass. We now have a new tutorial called Beyond Masterclass, and it's based on zero balance of momentum. You're probably aware of zero balance price and zero balance time. This is something entirely new that I've developed, and I call it zero balance momentum. And essentially, we get zero balance is when the big boys trade. So have a look at this. If you just look at this from this low down here up to this high, there's about 7 or 8 trades in there. But by isolating the momentum, we can now measure the momentum of the private traders and the momentum, more importantly, of what I call the commercials or institutions. They're the big boys, the big traders. Now, these are not hedge funds we're talking about. Hedge funds tend to take positions and hold them for long periods. These are active traders. This is the prop desk of one of the prime brokers, that sort of level of trading. Very, very high level. Excuse me a moment. Sorry, very, very high level of trading, daily bars. And what we've found over many, many years trial and observation is that the big players, the big dollar players, they tend to trade when there's zero momentum. And zero momentum is giving you a signal a day or sometimes 2 days beforehand of when those zero momentum periods will be. And that's when the big boys tend to trade. And if you can simply be aware of that and adopt their trading as by front running it as your turbo boost, your trading will do very, very well indeed. That's a quick look at it. If you are interested, those of you who've done a Danielcode tutorial, or those of you that haven't done a Danielcode tutorial, same thing. This next course is called Beyond Masterclass. And it basically is based on this zero momentum. And it's got a pretty heavy fee on it. But if you've done the Danielcode tutorial, we will deduct that amount of money you paid for the Danielcode tutorial will come off that fee, because this is really day trading. This is really time trading, I should say, simply taken to another level. It's time trading refined. It's what you learned in the Danielcode tutorial, and which you can now learn, incidentally, folks, for $2,400 at the Teach Yourself Trading. It's lesson number 4. Excuse me. So we have to have some deals for you, folks. So this is our end of Q1 deals. If you're ready to start your Danielcode tutorial, that's where I teach you one-on-one. You'll spend
10 or 12 or more, 14, maybe 16 hours with me. A whole lot of this stuff is sort of osmosis that works between us as we're working together. If you're ready to start your Danielcode tutorial or your Danielcode Beyond Masterclass tutorial, we're happy to give you $1,000 discount if you're ready to start before the end of this quarter, the end of September. For those of you who are looking at the Teach Yourself Trading, for those of you who want to buy lessons 2, 3, and 4, which is the main trading lessons, and you're ready to start before the end of September, I'll be happy to give you lesson 1 as a free gift from me. And I'll tell you, for personal as well as trading reasons, lesson number 1 will have a profound effect on your life, whether you're a trader or not. It's really very, very worthwhile doing. It's based on simple mathematics and deductive reasoning. It's really worthwhile doing. Quickly, folks, the 4th seal, if you're not already aware of it, Frank DB, who was my student and now the master, he knows more about this stuff than I do because he does it every day. And I taught Frank way back in 2011. It was actually the first time I've ever had taught the 4th seal. He's made it his life, and he's very, very good at it. And I have to say to you that I'm not aware of any other commentator, huge, famous, unknown or otherwise, who called the 2022 high correct. Frank was the one saying, as soon as that happened, this is not the high. There's got to be a subsequent high because it didn't happen on one of the Danielcode time cycles, which he's identified as ending cycles. And it's been absolutely brilliant. He's the one who said, that's not the high. There's going to be a correction and there's going to be a higher high. No one believed it at the time. A whole lot of people, including some of our clients, scoffed at it. It says ridiculous. Well, that's exactly what's happened. And as you can see here, he says this was his comment from Monday. This is posted every Monday. He says, stay tuned. This is another important opportunity for this market to make a major high. So get yourself subscribed. Go to the services page of the Danielcode website. Click on the PayPal link for Frank's 4th seal commentary, either S&P or gold or oil or all 3, whatever you wish. But I do tell you, this is an absolute 24-karat gold-plated commentary, and he's proven it in the most difficult circumstances. It's quite wonderful. Okay, this is what you did today, folks. This is your recent trading. This is an Aussie USD chart. We trade Forex as well as futures. I actually started off as a Forex trader. And you can see the last 2 trades in this Aussie were pretty nice. We've got a little bit of a whack around the low here, but that is not a big issue if you've got your stop loss regime under control. This is the British pound, Japanese yen. Still terrific volatility in these Japanese yen pairs. Look at this for an easy trade. $3,000 down, $2,300 up, straight off to TO3 buy, a TO3 sell, and a TO3 buy signal. An easy, almost $600 jump straight in. This is your crude oil trade today, folks. It's at $3,800. Came off a TO3 plus buy signal, 1 bar after the big push down low. Look at that big push down low. It's the grey bar. Look at the close. Almost exactly on the 67.07 blue line. That's what triggers the TO3 trade. This was the S&P. We had a nice run up in the S&P. We had a fail at the little reversal bar the day before, yesterday actually, I should say, and back in. Typical flip me today, 1 bar down by the high. If you get it within 3 days, up it goes. Put another $1,500 onto that trade, which was worth almost $6,000 already. This is gold. Had a nice run up, $6,600 straight up. $1,000 in the little counter trend. Why did that little dollar thing there stop there? One, the trade closed against the apparent trend. Exit first profitable close. You know that rule. Today, yesterday, back into a flip me buy and an inside bar today. Here's copper. Interesting stuff. We had a TO3 bar right at the low. Then we had, it got elected, and a little down bar here, just went about 2 or 3 ticks past our sell point, got a short there, and then reversed on us. Excuse me, that's why it's got a fail comment underneath it. Then back up straight into a TO3, flip me by here, up it's gone, another $4,500 into today's close. Pretty nice stuff. This is the Russell, and I've been saying to you for months and months and months, the Russell, if you're trading equities, the Russell's the best trading market. Have a look at this, TO3 sell, little rally back up, correlated NASDAQ buy to that high bar. Flip me sell to go down again. 3,900, what's the difference? Let's say 4,000, close enough on that little 4 or 5 bar sell. Buy signal there, TO3 and the blue line buy signal. The blue line is no longer on the chart because as the chart moves on, the old lines are taken off by me. But the 2 bars before that low where the indicator is closed right on a blue line signal, which gave you a TO3 and a blue line signal, and 7,200 straight up into today's close. That's nice trading, the Russell. This is the wheat chart. We've had a number of little nice trades here with an outside bar interfering with them as it went. 700 up, 600 up, 400 up, 500 down into today's close, and a couple of jiggles with a fail comment underneath them where the outside bar elected a signal against the apparent trend, for which those of you who've done the tutorial would know to use your special discretionary trailing stop. Didn't lose much at all. US T-bonds, much the same, nice TO3 buy signal at the previous low early September, $2,000 up, little sideways one, bit of a jiggle around the top. This market, we all know what's happened. It's been held up by traders waiting for the announcement of the interest rate cut. And same thing that always happens, buy the rumor, sell the fact. Got the interest rate cut, was gone straight down 2 days. A nice simple $1,300 per one contract. The amounts I put on these charts, folks, are just per one contract. You can have more. You can have a whole lot more. This is actually, I think, the same chart. And now that's the end for us. Wonderful. If you haven't already had a free trial, please go ahead and help yourself to a free trial. Go to www.thedanielcode.com. Just hit the register button. If you have any trouble, if you've had a free trial previously, the program will remember you and won't want to give you another one. So don't worry about that. Just contact Terry, who's at support at thedanielcode.com, and he will fix that up for you. And remember the disclaimers. Trading is very risky if you don't know what you're doing. It is very, very easy to lose a lot of money trading futures and Forex. The good news is once you do know what you're doing, it's very, very easy to make a whole lot of money trading futures and Forex. So I do urge you, don't risk real money trading until you're confident that you know what you're doing. The quickest way to get confident is do one of the Daniel Code courses, or more than one if you have the ability to do that, and we will make you a super trader in a very short order. And that's about it for me today, folks. I hope you've enjoyed it. It's been a whole lot of stuff I packed in there, and Pieter enjoyed it. Anthony DD from Chicago joined us. Good to have you with us, Anthony. And Rolf is going to get started on the first module of his Teach Yourself Trading video series, and that's grand. Rolf, go right for it. Okay, folks, so that's me for the day. I do hope you've enjoyed our presentation. I hope you found it interesting. I found it, I must say, I found it incredibly interesting to have gone through all that paper trading stuff again. And it's so brilliant when you're using the right tools. But of course, if you don't know the Daniel Code, you don't have the right tools. And that's why it's such a drama for most people. It doesn't have to be. It's simple. It just goes, it's mathematics. It goes one to the next and one to the next. Frank, thank you for posting, and I'm glad you enjoyed it. That's me for today, folks. Enjoy your weekend. I'm off the clock now. It's a Friday morning down here. In fact, it's 11:30 on Friday. I've just got to post the signals for Friday trading, and then I'm off the clock for the weekend. so when I will do new charts for you. It never stops, I promise you. Thank you for being with me today. If there's anything you'd like me to talk about in particular, please email me and I'll put it together for a webinar in the future. For tonight, folks, enjoy your rest of your week's trading. You've got a day to go. Rob H. is with us over in Auckland. Glad to have you with us, Rob. What a wonderful friend you've been over the years. Very knowledgeable man. Anyway, glad to have you all with us, folks, and do enjoy your weekend. Be safe, trade well, make tons of money, and follow the Daniel Code. That will just make things better and better for you. Robert, thank you, my friend. That's awfully nice of you. And Rob H. as well. Thanks, guys. Have a good day. Bye-bye for now.